following is an update and technical analysis on Bitcoin, the largest component to the cryptocurrency markets, here off the daily interval where I'd mentioned on the 5th of July, 2023, we're trading spot price 30,524, whereas we had a nice significant major resistance level at 31,914.30 right up above, or we had expanded negative and bearish divergences that had continued to establish and construct since the very beginning stages of the year of 2023. Again, large bearish divergences on all three technical momentum indicators, honing in down below, whereas you had a confirmed bearish crossover on the moving average convergence there. And then also additionally, nice clean near-term divergent high with RSI divergence there. And I had favored a consolidation phase right off this indecisive candle of a bearish doji star setup, bearish continuation pattern. And here is the update. We ended up getting that significant consolidation phase. And I believe we've reached a critical juncture as of now. And the entire trade thus far was good for, call it a 6.7% crash there. Added this new key level, which I believe is pretty significant, adding to the fact that we had consolidated for weeks or almost a full month on end. And that is the 29,869.50 price support there. And I believe that to be a pretty pivotal inflection point now, with multiple reactionary lows really across the board there. Just a ton of reactions all up above it, down below. And then additionally, a reactionary highs really across the board there. Multiple, again, reactionary lows, reactionary highs. Call it a multi-month significant price support level. And as far as any bull traders, long traders, they want to step in now for an aggressive long trade entry to the upside, where we additionally had this, which you would call neckline, primary minor uptrend line. Here, where we have already back tested it 3-4 days in a row there. So that is another key level to watch and hone in on, whereas you have this nice formation of a head and shoulder looking top here as well. Bear traders, short sellers, they want to see an additional, if there's any short covering here, bull traders wanted to see this level popped here. They want to take that previous high out there, take out that, start to squeeze out some of these short trade setups, and if it not, have a vast rush for the exit in covering their short trade positions. Whereas bear traders, short sellers, they want to see this level completely get taken out here. And that on a solid daily candle close below would put in additional selling, in my opinion, potential back test. And then what we're going to have is the 50-day moving average hovering up above, called dual line of support, honing in on that 28.6, 28.20 price support there. So that is a big key level to watch, in my opinion. But again, that is what they want to see there. Again, bull traders, long traders, they want to defend this key inflection point really at all costs to re-challenge that 31,914 price resistance up above, to officially pop that level, take that level out at all cost, and then start to burn out some of these negative and or bearish divergences for a big move to the upside if and when they get it. As of now, we're at a key inflection point on the technical momentum indicator dimensions, where the zero line thresholds are again beginning to be tested here, with the oscillator already breaking down below that zero line. Nothing definitive yet. But again, these are just key inflection points to hone in on and to really respect at all cost when trading. I'll zoom into the 240-minute interval here. And I've added this new primary uptrend line, minor uptrend line here. And we had a nice reaction here. We ended up having a big breakdown candle on the 240-minute interval. Some of these key levels, especially if you're an active and or day trader, you've seen these previous levels in my previous video here, 29,699, especially if you're a day trader. That was good for a 1.9% pop. Down again, we ended up having another scale in zone. I'll call it a multi-day, a rally, 1.6, 2.8, 2.3% pop there, all off these key technical levels that I've had issued before. And what I find pretty significant here is a potential head and shoulder, whereas you have a split of a neckline with a multitude of reactionary lows to strengthen the validity of that primary neckline there. And that is a key inflection point to watch, because if that level gets taken out, corresponding with the what I have here is the tan coded colors that are correlated with the daily interval here, call it 28,869. But if this level goes, we take out the neckline corresponding with the 29,699 price support there on a solid 4-hour close below. That's going to issue a potential bigger wave of selling, forced stops to go off, forced liquidations to go off, and then ultimately that next target zone, a pretty significant level there at the 29,141.50 price support. And I would favor some sort of reaction there, potential small bounce and or day trade. But that is a pretty key inflection point. I'll call it a multi-month support level, multiple reactionary highs, reactionary lows, really across the board there, where there's been extreme volatility when broken through and or broken above. And again, I like to see those psychological levels being tested once again, and that is just increases the odds of a significant reaction if and when we get that. For the bullish case scenario, potential divergent low here. Take away some of these lines real quick. For the bullish case scenario, potential exaggerated, what you would call exaggerated bullish divergence here on the RSI. So we have a potential RSI divergence. You might have on the moving average convergence as well, not on the oscillator. But again, we have a potential bullish crossover here on the 4-hour interval with, again, that nice clean bullish divergence, positive divergence there off that divergent low. Not anything strength with a whole ton of strength yet, but you could even add a potential, especially for active and or day traders, you could even add this key inflection point, which will begin to hone in and look like a potential bullish falling wedge pattern. But again, that is something very aggressive in my opinion, but it is holding up steam, and these bounces are getting bigger here. So that could spout footage. So you want to see a nice, solid pop amongst that 29,930, call it 30,000. That's exactly what bull traders want to see, where you do have the resistance up above in the 204-hour moving average. But if you take that level out, remember you have the minor uptrend line here, where short sellers need to hold that key inflection point really at all cost on a potential back test, and then have a failed momentum fueled overshoot back below the primary downtrend line here. Maybe you get a double bounce here, but again, these are some key levels that bull traders and or short sellers need to defend really at all cost. Break above this would be bullish and a prolonged momentum, and it would be very bearish if we get rejected here, and then to completely burn out those potential divergences, those bullish divergences. You take out those bullish divergences, it's going to be a very strong wave of selling, in my opinion, once you burn them out. So again, I believe we've reached a key pivotal inflection point. If you're short all the way to the top of that 31,914, you could consider covering some profits and running some free plays now off some of those gains. But again, I'll keep you updated if I see any significance here in the charts.